What a crowd. Thanks everybody for coming. Great to see you all. My name's Rob. I organize Idea to IPO. We hold events multiple times a week from San Jose to San Francisco. We always have a busy, busy calendar of events. I'd like to highlight a few that are coming up. Thursday, December 8th, Raising Money for Your Startup. It's here in Palo Alto. It's actually across the street on Page Mill. And December 13th, Thursday, Latest Innovations in AI, Artificial Intelligence. We have another great panel discussion that's over in Menlo Park. So check out all the details on our site, idea.ipo.com. We were launched officially on February 1st, 2010. At that time, we had no members, no events on our calendar. At this stage, we have over 40,000 members with all our meetup groups in the Bay Area. We've completed over 1,670 events. By any standard, by any measure, we're the most active, most prolific startup event organization in Silicon Valley, bar none. At least some of you guys got the memo. But let me expand on that. So if we're the most active, most prolific startup event organization in Silicon Valley, and Silicon Valley is the global center for entrepreneurship and innovation, that would make us the most active, most prolific startup event organization in the world. That's a little better. That's okay, I'll take it. Our mission is to promote entrepreneurship, support entrepreneurs, build community, and provide value in the Silicon Valley startup ecosystem. To that end, we provide content that's practical, actionable, and relevant, stuff that you can actually use to succeed as entrepreneurs. We believe in community because Silicon Valley is an aspirational ecosystem and it attracts people from all over the world who come here to do great things. Who here is not originally from Silicon Valley? Wow. So who here was born and raised in Silicon Valley? Just you guys? Okay. So whether you're a native or you got here last night, it's important for us to provide multiple channels for you to meet people, build relationships, and grow your network. We have tons of events. In fact, we have a regular TGIF, thank God it's Friday, mixer every few weeks at the Hyatt Regency Santa Clara. And it's hosted by CJ Terrell, one of our team members. Let's have CJ come up and say a few words about that event.
Hi everyone, I'm CJ. As Rob mentioned, we have what we call TGF mixers. They're really fun ways to get out in the community, just meet startup entrepreneurs that are growing their startups in the ideation stage, whatever you may call it. And we also have a bunch of marketers that come out as well, help them get to that next stage, or engineers, you name it. And again, it's really casual. We meet at the Hyatt Regency in Santa Clara, which is right next to Levi Stadium. Our next one's going to be on December 9th from 8 to 11 p.m. They are free. And they're really fun. We get people from all over the world to attend, from almost any country you can imagine. I've been doing them for a little while and probably met people from about 40 countries out there throughout that period. So I do highly recommend coming out. You'll really enjoy it. Again, December 9th, 8 to 11 p.m. Hope to see you there. Thanks.
With regard to value, it's important we provide value at each and every one of our events, not just for your money, because we know a lot of entrepreneurs are struggling. We also want to provide a decent meal at all our events. Was this meal decent? Yeah. Well, let's thank Pillsbury for that. It's not the usual Costco pizza that we have at our events, so let's not get too used to it. More importantly, though, we want to provide value for your time, which is your most valuable resource. Anyone here getting any younger? I didn't think so. So when you invest your valuable time to come to our events, we want to make sure that you maximize your ROI. We have a lot of partners that help us do what we do: law firms, venture capital firms, angel investor groups, incubators, accelerators, colleges, universities, lots of players in Silicon Valley. And once again, I want to thank Pillsbury, not just for the food, but for hosting us at this beautiful venue. We've held many, many events with them, and we look forward to many, many more. They're a great partner, and we're honored and privileged to be collaborating with them. So once again, let's hear it for Pillsbury Law Firm. A few of our other partners are here tonight. I want to have them come up and say a few words. Let's hear it for Wallace and Metis.
Thanks, Rob. Hey guys, my name is Wallace. I own a real estate firm. Been an investor for the past 15 years. Kind of got tired of lackluster agents. I handpicked my own team. We had the pleasure to work with a bunch of amazing people this year, and get them into homes and then help them move on. So if you guys are looking for a home, or you guys are looking or need a home, feel free to talk to us. We're right there in the back. See you guys around. Good luck.
Right, next up we have Brian in Launch Brigade. Let's hear it for Brian.
Well, it's a real privilege to be a volunteer. I've been helping Rob for many years now, so he gives me an opportunity to tell you a little bit about myself. I'm a business development rep with a company called Cloud Brigade, and what we do is we help mitigate the complexities that a lot of startup entrepreneurs face when it comes to reaching out and attracting new customers. We help mitigate the complexities on completing the development of their applications. And then we also provide managed hosted services. We're an Amazon Web Services partner, but we're agnostic, so if you have your favorite cloud, we'll work with you there. So we want you to focus on your core competency as an entrepreneur and leave the heavy lifting to us. Thank you.
Right, next up we have Long from Aptology.
Good evening. Hope everyone had a great Thanksgiving like I did. Ate a little bit too much as usual. So my name is Long, and I'm with a company called Aptology that I co-own. We've been around about 5 years. We do websites, e-commerce, mobile apps, blockchain. My engineers do a lot of crazy stuff. They're really good. They just don't like people. So that's why you have to work with me. And so sometimes you ask, well, if they're so good, well, they're not working for Cisco. They don't like people. But they do like working with me, and they do excellent work. I've been in the Bay Area for about 20 years, and why us? Not just because we're local, but some of the key differentiators that we also help with the sales and marketing. We have an extensive network of partners. So if you're in the IoT space, the chip space, the hardware space, the manufacturing space, because I've been here for 20 years, I have gone through the process of selecting the best people to work with for you. So if you have an idea, like I said, whether you have a software need or a hardware need, I would love to buy you a cup of coffee, share you with some of the projects that we're working on, and also share a lot of the experiences that I have from working with people like yourself. So I thank you for your time, and hopefully I will share a cup of coffee with you soon. Thank you.
So though our local mission is to support entrepreneurs here in Silicon Valley, our greater mission is to democratize entrepreneurship all around the world. To that end, we have a robust YouTube channel, youtube.com/idea-to-IPO. We have tons of videos. We've documented many of our events. This content is available on demand, anytime, anywhere, totally free of charge. Whether you're in Palo Alto, Maui, Moscow, or Timbuktu. Who's been to Maui? Who's been to Moscow? Who's been to Timbuktu? Frias is the only guy. So all these places have Wi-Fi. So the point is, if you have access to Wi-Fi, you have access to this great content, just as if you were here in Palo Alto. So we want to make sure that great entrepreneurs can emerge from anywhere in the world, not just Silicon Valley. Our partner in this endeavor is Tim Jeggers of Jeggers Films. Let's hear it for Tim.
Thank you, Rob. So yeah, I'm Tim. I am the multimedia partner for Idea-to-IPO. I specialize in videography. So I basically film a lot of these events. I put them on YouTube. I manage the channel for Rob. I also specialize in photography. I'm here from the Bay Area, born and raised. It's where I predominantly offer my services. Any kind of digital content creation, I can definitely help out with. If I can't do it, I definitely know people that can. So if you have any questions or interest in any of the things I just mentioned, I'm more than happy to talk to you afterwards. And just a quick request on my end, when we get to the Q&A portion of this whole discussion panel, we have these mics up here, and for the video, it's really important that we set a line up here, and then you come up and you just ask one at a time so we don't overwhelm the panel. and I get good audio, and everybody wins, and then you can watch the video and hear how great you sounded. So that's pretty much everything I had to say. Thanks for your time, you guys, and I'm going to pass it back to Rob.
I have to mention, Tim also does weddings and birthdays, so if you have one coming up, talk to him, we'll get you a discount. So without further ado, let's get started with our program. The panel discussion is roughly going to go to about 8:05. Shortly thereafter, we're going to go into audience Q&A. As Tim mentioned, if you have a question for the panel, stand in line, and that Q&A session is probably going to take us to about 8:30 or 8:35. Without further ado, I'm going to pass it off to our distinguished moderator. He is a partner in this firm, one of the top corporate attorneys in Silicon Valley. Let's give it up for Riaz Karamali and our panel.
Thank you, Rob. And welcome, everybody, to Pillsbury. We're really excited to have you here. So let me start with telling you a little bit about Pillsbury and myself, and then we'll go down and have each of the panelists introduce themselves, and then we'll just kick off the conversation. So Pillsbury is an international law firm which actually started in the Bay Area in San Francisco in the 1860s. So we're one of the oldest firms here, and we love to work with startups throughout our entire life. We've been working with emerging companies. We actually took Intel public in the 1960s and done many other IPOs and exits since then. And I focus on emerging companies in terms of from the earliest stages up to the exit transaction. So it's a lot of fun. And these days I am working with a lot of fintech companies. And next to me is F. Lindenbaum of Advanced Ventures. So
hi. So thanks, Riaz. So I'm Ephraim Lindenbaum from Advanced Ventures, and I'm a recovering entrepreneur. So I have been in many of your seats there. I started a company here in Silicon Valley, grew that, and exited. And what do you do in Silicon Valley when you exit if you don't start another? Become a venture capitalist. So I've been an investor now since 1999, investing out of our third fund currently. We invest in fintech while we're here, also health tech, ag tech, and food tech. We typically are early stage investors. So once a company has some traction, we tend to get involved with them as well. And we've been focused in the fintech space now for literally our entire time frame. So one of our first investments was a company called Perigo, which was in the 2001 cycle, and we actually just finally exited in 2014 when Blackhawk Networks bought them. So it's not all quick hits in the venture business, folks. So you can build a great company over time.
Hi, everybody. I'm Annie Armstrong. I am a partner with KPMG. I'm based here in San Francisco and in New York. I split my time. What's most relevant for this discussion is that I lead our fintech practice nationally. And globally, I lead the practice for a vertical within fintech for KPMG called Marketplace Lending and Alternative Finance. That means a lot of things, but mostly I split my time working with fintechs here in the Bay Area on regulatory compliance, pre-IPO assistance, and then my New York time is spent mostly with traditional banks and financial institutions, helping them set a strategy of how to partner with fintechs, helping them find fintechs that fit their solution or their problem, and then structure the partnership between them. Glad to be here. Thank you for having me.
That's cool. My name is Adam. The mic, am I supposed to be closer? We got a lecture about the mics. We're not supposed to touch this one.
That's what you...
And these ones are fine as is. My name is Adam Draper. I'm the founder and managing director of Boost VC. We're a seed fund and accelerator for emerging technology, but we focus primarily on Bitcoin, hashtag blockchain, and virtual reality. So I have my Bitcoin hat on tonight, most likely, for fintech reasons. Unless you guys want to talk about virtual reality, I could just take over this panel and we can go there.
Well, I was hoping you would talk about the confluence of the two, but we'll get to that later.
Oh, yeah, there's one company that on the Venn diagram of that. Okay, well, Adam Draper, we've invested in 160 startups over the last 4 years, 65 in the fintech space.
Awesome. Thanks, Adam. So my name is Jeremy Almond. I'm the CEO of a company called Paystand. I guess I'm the token entrepreneur on the panel. So what we do is we're a B2B payment company that helps enterprises manage their cash flow and receivables, really focusing on three core things. We help them speed up their time to cash, which reduces their DSO. We automate their financial process, so we sort of give an Uber-like experience in the commercial side. And then we dramatically lower their transaction costs because there's a lot of fat basically in the banking network and how that works. So I've spent the last 15 years in enterprise technology. It's partly how we started the company Paystand 3 years ago. And my observation in general has been that we've digitized a lot of the business process and moved it to cloud, things like CRM with Salesforce, accounting with NetSuite, business process with Box. But what you find is in most large enterprises, there's still some manual pre-internet process. There's paper checks, there's people doing swivel chair manual process, and so we're right in the middle of seeing, I think, a big fintech change happen on the commercial side. So hopefully we'll talk about that a bit.
You mentioned DSO, and like I know what that means, obviously, but for everyone out there who doesn't know what that means, what does DSO mean?
Yeah, it's a good question, Adam. So when a business has money that's sitting outstanding, it's called day sales outstanding. Right, so outside of Silicon Valley, when manufacturers are moving money and they send an invoice out and they're waiting for their money, that's a big issue. And so getting money faster is really important for big, unsexy companies, and that's who we tend to work with.
Yeah.
Great. So just to lead off the panel, we thought we'd first talk about what is fintech, and I think the person to do that is F.
Oh, so what is it? I got nominated. So I don't know why it's me. So yeah, we broadly look at fintech across all different categories. Many people think about it like that's payments, that's e-commerce, PayPal, Square. Okay, that's fintech. Let's put a bow on it and move forward. But really, it's a very broad category. It ranges all the way from e-commerce is fintech to even gift cards are fintech, all the way to real estate technology. Insurance is one of the hottest categories. And then we've got alternative currencies, we've got distributed ledger, a la blockchain, Bitcoin, and all the sub-levels of that. And then that moves all the way through the entire financial cycle that both businesses and individuals have, whether it's paying your bills, investing your money, trading stock. And then ultimately you end up in the categories like government and regulatory technology, which Annie is a specialist at. So, if you think about it, it goes all the way full circle, meaning it creates all these categories, then you have to wrap it in a bow with someone who will tell you how to manage it.
Yeah.
So I'll let you tell more about that.
No, I mean, KPMG definitely has verticals within it. I kind of gave a little preview of that during my intro. But the reality is that one of the most important things that we look at nationally is what is fintech today is not going to be fintech tomorrow, because there are new pain points that are coming up within the financial system all the time. And so if we are beholden to our verticals, we're going to miss the next big thing.
So still talking a little bit about the definition. I mean, Adam, you talk about yourself as being a Bitcoin and blockchain investor. I mean, that's really a subset of fintech, right? I mean,
yeah. I mean, if you think about it, the original fintech was hens being traded for cows, and then they started like.
I go abacus. I don't know about the
Come on. What is that?
Abacus
And then
coins.
And then you moved to coins with maybe stones of some sort, and then we created this bank system that was backed by gold, and then we created a bank system that wasn't backed by gold, and then we created digital money, but it's not backed by gold or anything, so it's just people pressing keys in a little dial, and then the credit cards and checks and all those things were along that line, and then up till now, now there's this open source global ledger that is Bitcoin on the blockchain, which allows for tokenization of assets, tokenization of money, tokenization. It's super, super cool. So that's what it is. It's the next evolution in that sort of fintech space. I mean, what technology is, all technology is, it's something that saves time. And finance and government and all these other things are always the last thing to be changed when new technology comes. So the internet, changed commerce pretty quickly. It changed social really quickly. It changed a lot of those other things. And now it's finance's turn to get disrupted. And the banks are trying to make sure to keep up. It's actually a really interesting time because in this, I don't think it's ever happened where banks are working so closely with startups to create new products. And that's a really exciting thing that's happening right now.
So, Jeremy, can you tell us a bit more about your company? It sounds like you're transforming kind of an ancient industry with technology, and just tell us a little bit about that and the challenges that you've encountered in trying to do that.
Yeah, maybe to key on a little bit of what Adam's talking about, how pivotal this is. Outside of Silicon Valley, it's amazing how many very slow, old school, non-internet processes still exist. So one of our customers is a very, very large $15 billion logistics company. And what they basically manage is when boats come from China or Central America and have goods, raw materials that are coming, they need to be able to get the goods off the boats at the port, take it to a shipper, and then the shipper needs to pick it up and take it to a wholesaler and then a retailer. It's a fairly complicated process. And today, the way that often works is there's a runner that goes from the distribution centers and actually goes out to the ports. That runner then talks to the guys that are the longshoremen, right? And then they have to figure out, okay, is all the stuff that's on the boat what's supposed to be on the boat and it's worth a lot of money? And then how are we going to make sure it gets paid? And oftentimes it's in cash or check. And then, okay, how do we get it the shipper actually back to the wholesale center? It's a very, very, very complicated process, and it's entirely manual today. And so what we would come in and do in this case is we would automate the process where the magic moment in Uber is where the first time you walk out of the Uber car, you expect to pay somebody, but then automatically everybody's paid, and everybody sort of along the process gets the money they're supposed to get, and it's been verified that you got to where you're supposed to go, right? In the commercial level, we do that sort of thing, right? We're now doing that with $1 billion worth of goods and boats and people and shipments, but we can offer the same kind of process, and so that's very transformative for that kind of business. So.
Yeah, Jeremy brought up a really interesting thing where actually in the U.S. we have a pretty good payment system in a lot of ways. Yeah. Like we generally trust our banks. We generally, depends who you're talking to, I guess. But generally, and then you generally have a pretty frictionless payment system. I buy online. I'm fine with putting my credit card information into the internet and for everyone to see. Argentina, Venezuela, there are a lot of countries that don't have that. And so I think a lot of what this fintech revolution that's happening is actually, it's cool for the US. I think it's like necessary for a lot of the rest of the world. And that's really the most exciting thing is the globalization of this financial technology. People are leapfrogging like the bank system. They're going straight from keeping cash in their mattress to mobile payment. Like that is crazy, with none of those middle tiers, and that's really an exciting thing. So.
Right, well, and then you bring in things like micropayments, P2P lending, and so on. And when you don't have this infrastructure of the banking system like we do here in the US or in Europe or in some of the more advanced countries, you don't have the ability to lend. And so what happens is, a great example, someplace like rural India, we're agriculture investors and looking at a company right now that has a P2P lending angle that allows farmers to borrow money, not from the local loan shark, which is going to charge them 50% of their harvest, but really a banking style operation which has a reasonable interest rate, and you're literally putting 30% or more back in their pockets in that particular model. And to Adam's point, that's all done on a smartphone. In fact, in a lot of cases, the villager doesn't have the smartphone. There's one smartphone that they're all sort of using in order to complete this transaction. So, the advantages of this, we leapfrog wire lines, we've leapfrogged everything else. To move into these technologies, and I think Annie was talking, we were talking about this earlier, banks are it's challenging to adopt that. But to Adam's point, if you're in a rural spot, and you've got nothing, this is the greatest thing that ever came. They don't even know we had fax machines. They'll never know that we had fax machines, guys.
I sure hope
so
not.
You should save yours, because someone in India is going to make you show a picture of it one day that you had a fax machine in your office.
The darkest day of technology was the fax machine. But what's a super interesting, you brought up India, a super interesting thing about India is that in the last, it was really month, 200 million, well, that also, that's a separate thing that happened a month ago. But 200 million bank accounts, digital bank accounts were opened. And that means that more bank accounts were opened this year in India than exist in the United States. And so that's a huge opportunity for someone.
Well, and to India's point, they just changed their entire banknote system. So what they were trying to do is eliminate all this graft and all this, stuffing and hoarding of capital. So they changed the banknote. So all of a sudden, there are people with literally like 1930s wheelbarrows full of notes standing in line to try and trade them in. And this is where when you start thinking about digital currency, and you're standing in a line for 8 hours and you're about to pass out because it's like 100 and something degrees, you're like, yeah, I could do digital currency. This sounds like a really good idea right now, right? It could have been right here. And so, that ability for adoption could really change the dynamic.
Yeah, I don't even think you really need to go outside of the U.S. to find that that underserved market.
Yeah,
so
let's come back to the U.S.
Yeah, well, I think India is a really good example, and globally there are some really big needs. But even in the U.S., when I think about the big players in, let's say, fintech, like for the last 3 years, it's really been about customer experience and changing the customer experience. And really, nobody was talking about lending to anybody that was anybody but prime and super prime. And they were just going to give them a faster experience and a better experience and better servicing, et cetera. And now I think the conversation has really shifted because the banks have woken up and they've said, look, we'll put money into customer experience. That isn't transformative. And now they're really looking at how do you have alternative credit models? How do you underwrite individuals with thin files? How do you take Annie Armstrong, who may be creditworthy at one interest rate, and literally Annie Armstrong, the exact same person, would not be creditworthy if you gave me a 0.5% increase in my interest rate. And so the regulators are really interested in that because there's a consumer good associated. And there are companies right now that are really tackling that market. And I think the regulators will get out of their way, and that will be the new fintech at least for the alternative finance market in the U.S.
Well, and that's where things like when we all talk about big data and AI and all these other elements, this only works when you have high speed, big data, the ability to identify whether that differential makes sense or not. And historically they just had these broad groupings and they kind of like, if you will, fit you up against a broad grouping.
Completely.
But when you've now taken it from 5 variables to 500 variables, it benefits all the parties. And so when we do talk about fintech, and we're kind of siloed here in the money side of the story, it might be AI, it might be big data. It's how to parse those terabytes and terabytes and terabytes of data to help Annie get a better rate.
It's all about me, guys. I'm just telling you, that's why I'm here today.
I think one of the things that's happening right now is that everyone's asking themselves what banking is like, and that's where the opportunity is stemming from. Is that all of a sudden everyone woke up in 2008 and was like, well, all our money could have just been taken from us, essentially. And and so all of a sudden the U.S. government put tons of regulations on the banks, which might have been the right thing to do, might have not been the right thing to do. But banks are struggling on the regulatory front, where then all of a sudden like peer-to-peer lending comes out and starts taking their lending business. Wealthfront and Betterment come out and start taking their wealth management business. Bitcoin comes out and starts taking their payments business. Like, what is a bank? In the end, it's a credit score, like in a lot of ways, in a wealth manager, like that, and they're looking at those two things and saying like, what does that look like in 10 years? And so they're really thinking like, where do we need to be in order to position ourselves? They're worried. They see the startups coming, and Jamie Dimon actually said that. He said the startups are coming. And
I like that. Did he have wide eyes when he did it?
So one strategy that the banks had was to collaborate with R3, which is basically a consortium of the big banks that got together to try to work on common standards, and I think the results have been interesting. So Annie, can you talk to that a little bit?
Goldman pulled out 2 weeks ago.
Yeah, I might not be the best person to talk about it.
So R3 is a consortium of a lot of banks that were grouped together by a company called R3. It's run by a guy named David Rudder. It was a crazy cool attempt at a way to really block off all of the banks as customers and own them for whatever the product might end up becoming, and blocking a lot of other startups from getting the banks as customers. I think that what they learned was that being a customer service representative for 55 banks is like the worst job. And that's what I'm guessing is happening right now, is that when you're betrothed to so many different huge financial institutions, where someone like Chain has really done this with about 5 to 6, R3 was really trying to bootstrap this whole thing together. I think it's going to end up working out. I just think that it's tough to really cater to so many banks.
You think
There's so many
R3 will
incumbents.
end up working out?
Yeah, long term.
I think they forgot that these banks just hate each other. I mean, it's visceral hate.
Yeah, I know.
I mean, the
None of
Goldman
the
guys
banks want
just
anything
pulled
to
out
work for
because
the
they were
other guy.
angry one afternoon.
Yeah.
I mean, you can't.
Well, first they used that against, like they.
Right, that's how they got him
That's
in.
how they got him in, was like, well, I don't want someone else to have what I have. And then now Goldman left. I think there'll be a couple more that leave over the next couple months.
I think that if you take a step back, it would be very interesting to see, there's a whole group of people, we have this conversation a lot where I work, where there's kind of two camps where they're saying, look, for blockchain to take off, you really need all the big players to get together and come up with standards and create the private chain, and then they're gonna be they're gonna make it standard, and now everybody's happy. And that would certainly work, but it take a long time. Versus the other camp, and I'm not even sure which one I sit in, which is, as soon as this is really formally in production in a couple of spaces, and I'm pretty bullish on fintechs adopting it first, then people will stop being scared of it and they'll jump on board, and it may be the first mover, as small as they are, that makes that proves out.
You
a
made
lot
that
of the-
second one sound like so like nice and gentle and like super like, oh, if they just move it. It's like once it works and completely disrupts an industry,
Yes.
then
Well-
we'll move,
Yeah, well, I don't think any one of the big banks wants to be the first one to talk to the regulators about the fact that they've implemented.
Oh, yeah.
it.
Here's the thing though, like this has happened before in the telecom industry, right? So telecom was highly regulated. The business model.
Oh, you stole my thunder, man. I was just
the
about to
people
bring that up.
Well, I mean, I don't even know, half the people probably don't even remember long distance calling in this room, right? Like there's a whole different business model in
charge
telco.
whatever you want.
Charge whatever, yeah, there's fat margins, and it was highly regulated. It looked just like the banks. And you had voice over IP who came in and basically had startups that won, right? And those were the early movers. And then you also had existing telcos that had adopted it, right? And they said, okay, we're going to come in first and early, and we're going to
Yeah, but there's
lower our
one
costs.
big difference, though.
Yeah.
There was never great phone crash of 1929. See, had there been the great phone crash of 1929, then you would have these regulatory, there was, Al Gore starting the internet and all that kind of stuff, right? But the difference is that when that crash occurred and you had the Securities Act, you had banking acts, you had the creation of the Federal Deposit Insurance Corp, things changed. Like I never got any insurance that I was not going to drop 10 calls on my way here down Page Mill Road, because if I did, I'd be rich, because I dropped like 10 calls on the way here.
Right.
So that's where this whole regulatory piece, when you're talking about that, and then there's the famous 5-9 story, right? Does everybody know what 5-9s are?
No.
No? You don't know what 5-9s
Yes,
are? Oh, you know what
do.
5-9s are.
He's
Oh, he's
playing
playing
the panel.
dumb. He's playing
playing
dumb.
the panel.
Ah, yeah. Well, so I mean, that's
Hell's
the
fun.
old term that both governments and telcos and banks and everybody uses,
availability.
means for their level of uptime or consistency, and really that
So
is
it's 99.999%.
right. Exactly, which means that there's some totally tiny little decimal way out, and see it somewhere, of chance it could fail. Now, we in the startup world don't work that way. 5-9s, we don't even get like a couple nines. I mean, so for us, if we got a 9 in the whole thing, 5 8s, we'd be stoked. I mean, if it ran most of the time, why do you think beta is in front of everything that people own today? Because if it crashes, we're like, dude, it was beta. So what you have to think about is banking doesn't work like that. A good friend of mine's Tesla crashed the other day. It crashed, like the software crashed, not the car crashing. Imagine driving down the road and all of a sudden, no screen.
Blue screen.
Right? Like nothing. You're like, you're waiting for the little like unhappy face to come up. That's not cool. Now imagine if you walked up to your ATM, you put your money in, and you got the unhappy face, right? Like you're like, you need $20, you need it now, and so you're gonna yell at someone. Just like, and so it's very different than if, hey, your Gmail was kind of slow one day and whatever. So this 5-9s becomes hugely important. And, when Andy's dealing with these big banks, we all think, well, wouldn't it be just great if they threw in some Bitcoin? I'd get my change from the ATM Bitcoin. But they're like looking at it like, oh my God, if this thing goes down, we all die. So it's that insane. And I mean, you deal with that, right? Are
Yeah.
they that crazy?
Well, I think everybody really wants the blockchain to work out, and I think that they're all playing around with proof of concepts and trying to make it work. That's what.
By the way, the funniest thing is that like Bitcoin's like a swear word at a bank.
Yeah.
like it's literally
Yeah.
like
Yeah,
it's like
did you notice how I didn't even say Bitcoin?
yeah,
I
like
said blockchain.
Yeah,
she's been
like-
saying
Yeah, that
it
was
right
like the
from a really long time.
relationship no one wanted to talk about, right?
But
They're
the
dating, but we don't know.
Funniest thing is that the companies that we've backed, the ones that are actually like businesses now, are all the Bitcoin companies. Like they're making money off transactions, they're making money off volume, like moving money. They're actually solving real problems. Where blockchain is still a philosophy. And it's where Bitcoin was like 3 years ago. Like 3 years ago with Bitcoin, like I'd be in a room like this, I'd say, have any of you heard of Bitcoin? And then, like that corner, 3 people would raise their hands. I'd have to explain what Bitcoin was. And then I'd have to like talk the philosophy, I'd have to speak the philosophy of Bitcoin, saying like, your whole world's gonna change and you should listen. And now we're doing the same thing with blockchain, except we have louder voices than mine. It's like the banks get to say those things, and people actually listen to banks, so that's always nice.
But there are inherent challenges with blockchain. I mean, like one of the biggest issues are how many concurrent transactions, nodes, or other things like that can have, right? So when you look at something like what I just heard a number like Visa does like 49 million transactions per sec, some crazy number, right? I mean, that would like, the whole house would burn down at the blockchain place. So, I think that, there's a long way to go. And the question really is does everything have to apply to the same model, right? Do we need to use blockchain for clearing transactions, or should we be using blockchain for mortgages? Anybody get a mortgage here recently? There you go. I mean, the stack of paper is like this big. And the reason is because that stack of paper then gets photocopied and sent to everybody. Well, but that's what blockchain does, is that if you signed it once, everybody get the same thing in real time. It's a distributed. Can you give us a primer on blockchain distributed ledger concept? Because that's helpful to take it out of the what it is thing.
Yeah, so the blockchain does one thing, and that's it. Okay, does anyone know what Bitcoin or the blockchain are? Does anyone know what Bitcoin is generally? Like internet monies. Okay, so the blockchain is the technology that operates Bitcoin. It's the reason. Bitcoin is the incentive structure for the blockchain. The blockchain does one thing. All it does is it replaces third-party trust with mathematical proof that something happened. So every 10 minutes, all of the transactions that have happened in the Bitcoin ecosystem, but also just assets being transacted, get cleared into this public ledger that everyone can see. And it's a very powerful concept when everyone gets it. Proving trust is like a really, really interesting concept. And that's what Ephraim is trying to say with he's saying that everyone gets a digital copy of the same contract that's spread all over the world. There are these machines that are like constantly, all they do is do this one thing. They count numbers to prove trust. And it's a super interesting thing, without going too deep into detail.
That was brilliant.
But I think the key, good job, Adam.
Yeah. Come on, man, give it up. Anybody who's gonna.
That's like a TED Talk right there.
I got a PhD in
Distributed
blockchain.
ledger.
But what is trust?
Whoa, dude.
But I think one of the things you said earlier that I don't know if I fully agree with, which is blockchain is sort of Bitcoin 3 years ago. What I think a lot of the companies that are doing blockchain today are learning is outside of this little bubble, you don't talk about blockchain, right? So the description I gave you.
The first rule of blockchain.
Don't talk about
Blockchain.
blockchain. No, I mean, the description I gave you guys of the supply
It's
chain,
like the
right?
booty call of finance.
Yeah.
I mean, you just don't tell anybody. What's the deal?
Yeah,
Vegas.
The Vegas of finance.
If you're
I like
doing
that.
supply chain, right, and I'm talking to a COO in a $15 billion company, blockchain is not my first conversation, right? I described your whole scenario of speeding up things, automating the process. That happens to run in the blockchain. It does not. I mean, it's not the thing. Maybe the banks are talking about it.
No,
I just use it to create value for the customers at the end of the day, right? And the technology be damned, right? Like at the end of the day, the voice over, like who cares how voice over IP worked? It's just the fact that I can Skype somebody over, back in France and not pay $7 a minute, right? Like at the end of the day, that's what blockchain does. And for the the text, like my engineering team, that we care about it.
Yeah.
But really from the customer side, all that matters is the value. Can you make things actually work better?
Well, I'll give you a good example that no one ever thinks of when we talk about fintech is Walmart just adopted blockchain technology for food security, meaning being able to track food through its pipelines. Because if you think about it, it's a very complex, to Jeremy's point earlier, ecosystem, obviously in logistics. But think about Walmart. How many pieces or items of merchandise, or SKUs, if you will, are moving in their logistics system at any time? I mean, if I think of that number, my head just hurts, right? And they're adopting this because, now you're talking about people dying. If there's a bad product, if there's expired chicken or something like that in the system, people die. And then it gets much more interesting when you start talking about, we're talking fintech here, but how does that apply to other things? And the concept of distributed ledger, like Adam was saying, that piece of information is in essence replicated in real time to everybody. So, the person who's selling the chicken, in essence, would be able to immediately know where that chicken came from, where it stopped along the way, did it happen to defrost on a truck in the Arizona desert, and now that whole family is going to die because they ate something nasty. So that's super interesting if you think, and that's blockchain saving the world, man.
And
Yeah.
40 to
So
It went from Fight Club to saving the world.
I want to bring one point from Jeremy up one level about when I'm talking. You made a really, really important distinction there that I want to highlight, which is when I'm talking to banks, they don't necessarily, if they're doing it right, they don't necessarily care about the fintech itself. They care about the problem that they're trying to solve. It could either be that they have a declining market share within millennials, or they can't underwrite a small business loan in a cost-effective way. And so the guys that do it right are not what I'm calling innovation tourists. They're not coming out and just trying to find out what's sexy and how do we apply this to a business problem. Every single time that will get lost in the pilot stage because it does not have a key person within the bank that wants an actual business outcome that will see it through its implementation and commercialization. So for anybody who's trying to have an exit strategy that really appeals to a financial services organization, I cannot stress that point enough. Don't necessarily care about what's sexy, but try to figure out what the pain point is and then address that, and that's the best way to, I think, get acquired or partner.
We see a very similar thing happen in all the technologies that we work with, is that a lot of people get really, really excited about the technology, and they say like blockchain and we'll sprinkle it on something, or virtual reality and we'll sprinkle that on something. But in the end, it's really why are you using this technology to solve that problem?
So we have a lot of entrepreneurs and probably would-be entrepreneurs in the room. So what are some of the pain points? Where should these companies be
For
starting?
financial services?
For financial services.
Where do you start?
Throw a dart at a board and then go.
Well, I mean, near and dear to my heart is regulatory issues. So literally, I'm going to not go too far down this path, but thinking about the fact that every executive in a bank is thinking about their cost and their revenue. And their cost pain points are for overhead and regulatory compliance. So anything that anybody can do to free up capital on the cost side, and that is hugely absorbed in the regulatory compliance area. And on the revenue side, I think that's addressable markets. That is, there's a whole untapped market out there that fintechs and payday lenders, which is a totally separate thing. I don't want to even imply that I'm trying to aggregate those two. God. But people that are getting that right, they're able to underwrite effectively, and that increases revenue. It decreases risk and their defaults, and so I mean that's very broad. But you can tie something to revenue or cost, and those are the big, I would say, the big brushes.
Will banks really buy from startups?
Well, we have an interesting product right now where we were talking about this a little bit earlier. When organizations kind of get through the pilot stage, let's say like, okay, a bank really likes a fintech, we've introduced them and they're going down this path and it looks like it's a match made in heaven and they're getting all excited. And then you get, bam, corporate compliance and risk management involved and vendor risk management. These banking organizations, and this is regulatory driven, it's not that they're just, they want this to be a big impediment. they start peeling back the layer on some of the fintechs, and it could be something as small, I mean, I say small, but it could be an investment that a fintech has taken from Russia or China, an early stage seed funding or early round funding, and that can absolutely derail the whole thing. So thinking through and I know it's impossible to think through what you want your goal to be in terms of a partnership or an exit strategy, IPO, et cetera, but there are some things that you have to do, like basic AML, BSA compliance, basic compliance regulatory. I mean, there's a couple of things
So
that you just
AML
have
is
to.
anti-money laundering.
Yeah, sorry. Yeah.
What was
These
the
are
other acronym?
BSA, Bank Secrecy Act. It's basically this.
Throw in KYC.
KYC.
Acronym hell.
Yeah.
gotta do
Anyway, I can tell everyone's falling asleep as I speak, so I'm going to stop. But I do think there are things that if you want to get in bed with a bank, you got to understand the language and their pressures, and at least be able to explain why they don't. Why they don't either apply to you or that you've thought about it.
Which is why you don't use the word Bitcoin. And you do say we can move your money for cheaper the same way you've been doing it.
Or you can even look at fintech in a different way, in terms of low-hanging fruit, right? Instead of kind of the Don Quixote problem, right, going at the bank right at the front of the castle wall, think about how companies have come out with blockchain for food. Think about how companies are using blockchain for, mortgage. Think about insurance as a huge category. Similar, there are a lot of the same regulatory aspects of banks, but, insurance companies operate on a different mechanism. Banks live within the lines of don't get in trouble and try and make a tiny little slice of revenue off all these little products, right? The insurance business is a very different mechanism. That's all about getting your money and running an actuary table on them, having to pay out your money. And so a lot of the insurance business revolves around investing the money you gave them and getting certain levels of return. So, they tend to be a lot more oriented toward saving money, saving risk. I mean, Allstate was one of the first players to use mobility to do things like claims and elements like that. So, applying some of the things we're talking about here into some of the other areas, as far afield as food, all the way into the near field like real estate. I mean, real estate's huge. It is so broken. I mean, where's the real estate guys in the back? Is real estate broken back there? So there you go. Real estate's totally broken. If all of you started companies for real estate, you're all going to get rich.
But when things are running perfectly, there's no huge opportunity. So it's good that it's broken in a lot
Keep
of
it
ways.
broken.
The other thing that I want to happen, the other thing I have a problem that's near and dear to my heart. My first company was called Expert Financial. We were trying to be the secondary stock market for private securities. In the venture business, there's actually probably I think one of the biggest problems is liquidity. And it's completely not solved from a venture capitalist standpoint. And it's a really interesting problem that I think is being tackled in a lot of different ways, and there's a huge opportunity to solve. So not only for private company securities, but there's tons of secondary activity just in the world that could be a huge opportunity for someone.
So lots of good
I think the
ideas
thing
here.
I might, F was talking about insurance, which we tend to work with a lot, and property, but if I was to abstract this in a bigger question, which is, originally you were asking, what are the big opportunities? I tend to think about in fintech, and particularly around blockchain, not so much blockchain for XYZ vertical, but where are the cases where two systems don't talk to each other well? Because if you take Adam's esoteric, trustless system, right? Like, when does that matter?
Esoteric. He called you.
I think he was talking about when he started doing the whole trust thing.
But when does it matter, right? It's when these systems don't talk to each other, right? ACH does not talk to Swift natively. There are things in the title industry that don't talk to other parts of the title industry.
Oh yeah, the title industry, man. Someone
That is busted.
just like
So
That's
well,
broken.
I don't think that should be a thing. Like it just shouldn't be.
I'm
a business.
in, man.
Like,
I just paid a bunch of money to a title guy. He
Yeah,
didn't do
it's
anything.
gone, it's gone. But I think that's like, if you're an entrepreneur and you're thinking about where can I actually solve a problem, and where does blockchain or fintech actually create dramatic improvements, it tends to be where there's a middleman or people that are in the middle of a process where the systems don't talk to each other native, so they're putting a human or something super expensive in the middle of it.
That's good.
So one word that's kept coming up tonight is regulation. And with the new administration, with a president-elect who said, we're going to get rid of 70% of the regulations.
Someone just said the party's over like
Where's the
time.
alcohol?
Yeah, I was
Go
gonna
home.
say.
Is this going to create great opportunities? I mean, are we going to enter, a world with lots of, opportunities for fintech startups because 70% of the regulation is going to go away?
So I'll start this. I would not be so bold as to make a big prediction, but I will say that in dealing on the banking side, I mentioned before, and I'm not going to go into like the financial burden of Dodd-Frank. Oh, thanks, F. But
I'm here for it.
but yeah, right. But needless to say, there's a ton of capital that they've had tied up in a lot of regulatory compliance, and that could be direct, compliance functions, but also capital they have to retain on their balance sheet. Anyway, I won't bore you with that, but. The ease of regulation will actually, in my opinion, open up that revenue stream and that capital for them to make some of the investments that they have not been able to do over the past couple of years. And while I think that's good for entrepreneurs because they're going to have an open, they're going to probably have a little bit less regulatory scrutiny, I think it's going to be really good for the banks in their strategy to react to this disruption. They're just going to have more money. And so I think that's going to drive a lot of M&A activity. I think it's going to drive a lot of increased partnerships. And I think it's going to be really, as much as I am not going to bring my political views into it, I think it will be an exciting couple of years. Anybody care?
We're going to have time for questions in a few
My
minutes.
question is a comment. You're missing what is now a worldwide recognized agreement. I
Which
was
one?
the developer of the MagStripe card. I was systems manager for Asia. There are 5 countries in Asia that don't even have signatures. And they all work on a common standard. It's a 40-digit standard, and every card issuer in the world talks to each other on that common standard. And that's the way they carry on all financial transactions. So there are agreements internationally, including Asia.
Okay.
Good point.
Sorry.
Anybody else on
Sorry,
regulatory?
are you saying regulatory wise?
Absolutely.
There are agreements for all these,
Together,
for all of the credit cards?
all financial instruments for
Yeah, pull up.
Yeah,
That includes checks.
okay.
They include checks, includes cards, any instrument
So you,
for a transaction is tied together with a common 40-digit identification.
So I'm
so
not
are you,
done talking
are you
about
agreeing
Trump.
that
Yeah,
it's,
right, Trump. We're gonna talk about something more popular.
I think it's interesting. So are you disagreeing with us or agreeing with us? I can't tell.
That was the
More
Batman
agreement
post.
than you people recognize.
Yeah,
I just gave you the agreement.
no, I get that. I'm saying what part of what we were talking about were you disagreeing with?
There was a point made that there was not recognition.
I have no memory of that.
There was not recognition.
Yeah. There's no recognition of agreements globally?
This thing's been in existence for 30 years.
Yeah, okay. Well, maybe I don't quite understand.
You're not that old. You don't know.
Give you an example of this question.
Whoa.
Like, I'm from China. I'm Victoria. She's from China.
it's cascading.
Oh.
Okay, it's just like in China, we can have all the transactions in real time, in a second, without any delay and.
You're talking about real-time payments.
Yeah.
Oh, real-time payments. Okay, yeah.
Alipay.
Okay.
Alipay.
Yeah, no, real-time payments is a real, yeah, I mean, I don't think we've really kind of dapped into real-time payments, and we've talked a little bit about settlements, but that's very different. That's cross-country settlements among banks, not real-time payments within consumers, but regardless, I think that real-time payments are definitely coming to the U.S. I mean, that's an initiative that,
Problem is the underwriting. So like, who's gonna guarantee, or what's the insurance side of those payment side could be interesting.
yeah,
So that's a big opportunity too. Start one of those.
so good.
So in terms of deregulation, Adam, do you have
Yeah,
anything to say
but
about that?
real-time payments, we won't take any more questions because they're gonna hook me at some point. But the real-time payments is not actually a real thing because you're actually creating an agreement on the backside that is saying, hey, with a credit card company, like if you're saying that's a real-time payment, it's a 30-day
Or 60.
or 60-day transaction deal that's being made for a loan, and that's what your credit's built on. You can't physically move assets instantly.
But it's not about that transaction.
Okay.
It's about transactions. For example, I can transfer money to you, debit card, like chat.
Yeah.
So really, when we take questions, we're gonna have people get up there so they can be, transmitted around the world. So people who are watching on the web, they're not gonna hear people in the audience. So there's a time for this, and we're gonna do it very quickly, and we'll have people go up to the front. So right now, I know we've got entrepreneurs in the room, and we've got the fintech investment, according to statistics that I've just shared with me before the meeting, has fallen 47% in the third quarter, as on a quarter-on-quarter basis. And so, what does that mean? What does that mean for entrepreneurs in the space? Is the sky falling, or is this just a temporary blip? What do you think?
I mean, the signal, it sort of started with Lending Club, and then there's like a public signal that happens where all of a sudden, venture investors always get scared, and then they tighten their money around that specific sector for a little bit, but then they just try to get better deals out of the entrepreneurs that are coming at you. That means it's the best time to start a business. So right now, the best time to start a business was in 2008, 2009 for fintech. Like, all the companies that started in 2008, 2009 are still around are billion-dollar companies. And not
but that's because
okay,
they're like four.
Mass
And the
generalization.
5,000 that were started at the same time are decimated, but there are four left.
Yeah, the apocalypse was good, except
Well,
for
but
the
that's the
four.
whole thing. It's like, does anybody remember Plaxo? I mean, come on. Are you still keeping your Plaxo account going? I think, so there are only a few left, though.
From what? 2000?
Yeah, 09.
Oh, I'm saying, well, yeah. But I mean, that's just the nature of the beast, though.
Right.
Yeah, and that not many started that year. Not
Right,
many
no,
started in 2008, 2009. I'd say the percentage was actually, what's happening? The percentage was actually probably higher. You always want to go where no one's looking. That's the key. And so if everyone's thinking fintech is not sexy, it is the sexiest time, because there's a time delay on excitement. Eventually the wave will come back, and you want to be there when it does.
Right. Well.
So KPMG just did we do something called the Pulse of FinTech. It comes out quarterly. It's global. It tracks funding in the FinTech space. Of course, you have to agree how we define FinTech. So our Q3 report just came out a couple weeks ago, and it did show a decline in the U.S. But internationally, it's not the same story. And I think, and of course, my humble opinion, is that it's VC investment in general related to the U.S. presidential market. I don't know that it was fintech specific. Of course, I do.
I think that it really hit a very frothy point here. I think, VCs, in this weird way, we have the short attention span, and we forget about these technology cycles. Mm-hmm. And, it's sort of like where VR has been, or where Adam's next focus will be for Boost. It'll be VR, Bitcoin, and
space.
There, you heard it here first, guys. You just wait. But my point is that we forget that when everybody ran at telco, and I think Jeremy brought that up, there's a lot of money that went into networking, and then all of a sudden they hit the brick wall of the giant telcos, and then everybody bounced off the wall. A bunch of companies got decimated, and a few made it out. A few kind of found a way through. And the same thing with fintech. Everybody thought banks were going to be like, oh yeah, we've been doing it wrong all these years, and you guys showed up, and we're just going to rip it all out for you. Yeah. And what's proven is that this is a much longer cycle. And what happens there is VCs, we have a specific time horizon we invest in. So at the end of the day, if the company that you're funding doesn't have a market that will allow you to exit or to merge or be acquired within a reasonable time horizon, then it becomes challenging. And so when you've got an uncertain regulatory environment, once you've got an uncertain sales cycle, right? This isn't 6 months. I mean, what's the sales cycle to B of A? I mean, it could be like 5 years.
Yeah.
Easy. Well, that's not a venture deal to us.
Yeah.
I mean, a deal that your customer is going to take 5 years to sign, I mean, forget it.
And the company won't be there.
Yeah, I mean, we're not gonna keep, we're not in the business of keeping you all going. We're not like living in your parents' basement time here, guys. So, you need to be able to move quickly. And so that's where we've seen a lot of pivots into the other categories. We've seen it go international. We've seen it in smaller markets. The other thing about this.
Insurtech.
Insurance tech, yeah. I mean, that's.
There are other verticals that
Totally.
Yeah.
And real estate, insurance tech.
Yeah, those are big ones. I think the thing though, the message I would take away is, I think Ev was right. There's 4 or half a dozen big winners out of 2008. If you're starting a company in fintech that requires an enormous amount of operational excellence, you cannot screw up. It's not move fast and break stuff, because you're moving $100 million of money. A single bug goes in the wrong place. So you have to be in it for the long term if you want to be one of those 4. So, and this is true with most entrepreneurial endeavors. You're playing a 7 or 10 year game if you're playing in the big leagues. And so what it's done is it's filtered out a lot of the tourist side. I do think for Adam's right that the smaller crowd, actually, this is the time to be involved, because at some point, the banks, this is an eventuality, right? Like blockchain and a bunch of other tech that's pushing these industries. It's an eventuality. It's a question of, is it 2 years, is it 5 years, is it 10 years, right? So if you take a long time horizon, there's going to be consolidation in the space in M&A. The banks have to be able to buy at some level, because Goldman and a few folks have blockchain expertise, but most of them don't. So if you're good at this and you're in it for the long game, there's either consolidation or you make it through. But that means you have to have internally like a sense of grit on your team, because it's not about going and getting another $5 million seed round or whatever. It's about building a real business.
Well, and then the real question is fintech going to happen here? Because, this is not where the decision makers are at a lot of the big a lot of the big banks and financial institutions. They tend to be in, Raleigh and
Richmond. Sorry, that was
but really it's a New York thing in a lot of cases, other than Wells and so on. Or you've got the total, upstarts of SoFis in the world, lending clubs, here and so on. But at the end of the day, I mean, I think, you have to think about, what you're trying to penetrate market-wise, because to a large degree, there are other ways and there are other aspects of fintech. And you almost have to say, what's the fin part and what's the tech part? And what Adam's doing with Bitcoin and blockchain is super interesting tech that just happens to have come out of, to his point, incentivization. That's going to do great things for health records. It's going to do great things for real estate, great things for food and ag.
So I have one more question, but folks who want to ask a question themselves can start lining up against the wall there, and we'll get to you in just a couple of minutes here. So I did want to circle back to the teaser at the beginning. Adam, what's the confluence between virtual reality, augmented reality, and fintech?
They're all pieces towards building my Iron Man suit.
That's great.
I have seen one company that was a VR world that had a currency that was based off of Bitcoin. But other than that, there is not very much actual Venn diagram overlap. But yeah, it's about like the most talented entrepreneurs solving the biggest problems with the newest technology. That's sort of what our focus is. And
Cool.
Blockchain, virtual reality.
Okay. Well, we can move to some audience questions.
Thanks. Great panel, guys. Sounds like you guys. It looks like you guys are having a lot of fun. I don't always see that on a panel, so
good.
Great job. Yeah, you're the
Thank you.
there. Thanks, Adam. My name's Aiden. I work for a fintech startup where we basically take robo-advice and wrap a 401k retirement plan around it. So my question really has to do with, what are your views on robo-advice and wealth management fintech? Where do you think it's plateaued, or where do you see it goes next? Thank you.
So can you explain? Okay, what problem do you solve by having robo-advice wrap up a 401k?
Oh, so essentially, sorry, I wasn't prepared for it.
Sorry.
No, I'm ready for it. Essentially, what we are doing is basically taking like that robo-advice model popularized by Betterment Wealthfront that you mentioned earlier, and instead solving a problem where basically small businesses in the United States really are kind of like they're kind of held away from offering 401k retirement plans. So we basically said, well, that's a real problem space that we can take that robo angle and with some other fintech pieces really solve that problem, because about half of working Americans work for small businesses like startups, and they pretty much have no way of saving for retirement. So with the looming retirement income crisis in this country, this is one part of solving that bigger problem. So we said, like, we can lower the costs, make it more administrative practical. So a guy that runs like a pastry shop in Palo Alto, yeah, he can offer a 401k and not have to worry about being a 401k expert, and give it to himself and to his employees. So
What was
did that answer
the
your question? Now?
Yeah, it answers my question.
Okay.
What was your question again?
My question to you guys is, there's the Fintech, vertical for
Yeah.
robo-advice,
Yep.
wealth management, solving the problems of like investing money, right? What's your, so most of the discussion is kind of like
Yeah.
centered on other areas of
Yep.
Fintech. So I'm wondering, like, on that vertical,
Yep.
where do you see it going? If you have a point of view on that, and like, has it plateaued? Has it like, where does it go next? Do we have a shot?
So I can start just
Yeah.
because robo-advice and wealth management is a vertical within KPMG's Fintech. And
She sounds pretty good. I'd hire her.
yeah, right. So no, but we are very bullish on robo-advice. Now there are players already in the market, right, that are just offering the kind of the robo-advisor, the wealth management, the digital, and I think that plays really well to a disgruntled millennial group, right? Because they don't. At least our research would say that they don't care so much about the guy, the white-haired guy talking about his advice as much as they care about big data and saving cost. They don't want to pay the fee for that guy. Where I think it gets really interesting is building in artificial intelligence into the back end of these robo-advisors. And we've seen some kind of interesting players in that space. And I think the 401k is a really cool idea as well. And I think, it might be interesting to try to shop that to existing broker-dealers, by the way.
Yeah,
Because I think some of them really want that. I mean, not to say that's your exit strategy, but I think a lot of them don't offer that right now, and it might be interesting to figure out how to partner.
And I think, just
course
from
that's-
Other asset managers.
Yeah.
Yeah, asset managers.
a white label
broker-dealer.
solution, but I would, and that's a really great point, because what I was gonna bring up is, my belief is your number one issue is CAC, your customer acquisition cost. And at the end of the day, going out and, that whole SMB business is like El Dorado that no one ever found. And the first thing I'm gonna say to you is you could build the absolute coolest, greatest robo-advisor that'll, take your kids to school in the morning and brush your teeth for you. What's it gonna cost you to go find that baker in Omaha to sign up to your system? And, it's very challenging to launch those kinds of platforms to them. So to Andy's point, I mean, as a white label solution to broker dealers or small networks like that makes total sense. You take the customer acquisition off the table, and then it's just finding an economic model that makes it a venture-worthy business.
Or even more interesting, going into or not even more, but equally as interesting, because it's a really good
probably
point.
more.
No. I mean, you're just starting my mind spinning, because you have a lot of companies that are really focused on small business lending, because
There you
that is
go.
a huge pain point you have Squares going into Square Capital, et cetera. And if you could use that distribution channel and that customer base to offer that product, that might be a really compelling joint venture.
Yeah.
Okay, there you go. You got some
Thank you,
ideas.
guys.
We're just here to help.
Yeah, right.
Fantastic.
That was like $10,000 of advice you just
Yes.
She's gonna send you, just drop your card, because there's a bill from KPMG.
I require a beer, okay?
Thank you so much. It was a fantastic panel. I especially enjoyed the conversation around alternative lending, credit scores, mortgages. If we look at the market, what happened within the last 10 years, origination, underwriting has been disrupted from players like Prosper, Lending Club, On Deck. But the next big thing is probably the secondary market, the first and secondary market, basically. And I'm Arturs. I'm working at a factory. It's a fintech startup. We're building a blockchain-based secondary market. And my question is the following. What are the best distribution channels to these financial institutions? How to approach them in these kind of cases when you have a solution that is a little bit faster than any player is ready in the market, actually?
Well, I know Artur's. He went through Boost VC. But the
Oh, he's a ringer from you?
yeah,
Look at that! Look at it! Look at it!
actually, I didn't tell you guys, but this whole audience.
Wait, are there 160 of you out here that he funded?
I've been plugging
Wait, are you all
Boost VC
here?
this whole time. I actually think the question is not what's distribution for these institutions. I think the question is more, it's actually back to these two, reg tech. It's how can you make sure that all of the regulation questions are actually solved for a big institution so that they can innovate? Like, that's the real question.
Yeah, that's a good one.
So I think that's what, like, all these banks got really, really overexcited, started throwing all this money at all this new technology, but then they realized, oh, wait, there's all this whiplash from the fact that we actually have to be regulated and pay things for those stuff, like the back office stuff, KYC, AML, whatever. And so that, I think that's really the question. So once you solve that, once you've filled that hole, then the next part you can actually sell the business, like you sell to the people.
Well, thank you, Adam.
Yeah, you're welcome.
Ted, the advice.
I'll see you at the office.
It's a lifetime relationship you have over at Boost.
There are some really interesting models that are happening. It's not just KPMG, but a lot of the big four are inviting big banks and startups into what we have Innovation Lab in Soho and one around here.
Oh, now you're competing with that.
No,
Okay.
no, we don't do.
No, we
we
work with Innovation.
Yeah, I was going to say it's not
They
the same
can't do
thing.
what we do.
Exactly, it's not the same thing. It's not an accelerator, an incubator, but the idea is to create kind of a Scrum-like atmosphere where you have a problem that you're trying to solve and you have differing points of view, and the key is trying to get the right people in the right room. But certainly, if you have access to individuals who might be able to make that happen, that could be an interesting place to start.
So Annie, I'm intrigued by what you.
That's not the right answer.
You know,
Honestly, there's like no right or wrong answer.
The right answer to this gentleman
Yeah.
is the American Banking Association maintains a set of committees to examine open issues. And what he wants to do is go to the ABA.
well, sir, you can talk to him after the program, okay? Right
You're
now,
not giving the right answers.
well, you can speak with him
You could
after
be
the
on-
program.
I'm more making this stuff up as we go along.
Annie,
I mean, let's just not get around.
I was intrigued by your innovation lab, what
Yeah.
you're talking about.
Yeah.
Are you saying that you bring in like competing startups to offer a
Yes.
solution to institutions, to banks?
So yeah, we have a bunch of different things that we do in our innovation lab. But one of the things that we do is we will bring large financial services institutions that are either they have a known problem or they are just trying to set a strategy. And there's a bunch of research that happens beforehand about the signals of change that are happening in the industry. And then it's kind of an immersion session. And part of that is bringing in some of the people that are disrupting them and explaining that technology with the end game of coming up with some solution that benefits everyone. But everybody has to kind of have the same, it doesn't always end up in a partnership or whatever else, but I will tell you that a lot of the earlier kind of disruptors walk away with a different perspective on what problem they're trying to solve and what they need to do in order to be a big player in that space.
Though I think the thing I would add, and these guys see way more deal flow, I'm just N of one, but is I keep kind of hearing things move back to selling to the banks.
Yeah.
In most cases, you shouldn't be selling to the banks. The
Totally
sales cycles are
agree.
long.
Don't sell
and in these
anything to the
innovation labs, like a
Banks
lot
suck.
of what I'm seeing is they do some pilot, and maybe you get a cool seed
Yeah.
round from somebody, but it's just a pilot. Like if you want real business, you got to go find the channels that are outside of the banks, because fintech doesn't most of the time outside of your infrastructure need to rely on the banks at all. So half of that stuff to me is irrelevant.
Yeah.
So let's take another question.
My answer is caveated with, it's not worth it to go through the regulation to sell to a bank.
Yeah.
So go find another customer.
Yeah.
And he's gonna keep telling you that until you go back to the office and recode that stuff.
Thank you. Yeah, I'm Victoria Xu from China. We are a non-profit organization to promote innovation and startups in terms of connecting China and the rest of the world, especially like Silicon Valley area. So my question is not specific to China though. So I'm wondering, on top of our panelists ahead, then what are those inspiring stories that you know from global perspective that great in terms of fintech that could be very interesting to share with us? probably some already very successful stories about innovation or disruptive fintech that already happened in the rest of the world, globalized, not just the U.S.
Well, it's inspiring. I don't know. I mean, there's a lot of really great entrepreneurs out there. Like, and you know, you're sort of listening as like these guys are the heroes, the like entrepreneurs.
Now he's being nice.
Okay,
but I'll give you one. We have a company called Bitpagos that we backed, and the founder's name is Sebastian Serrano. And when he went through our accelerator, he was 30 years old, and he said 3 times in my life, my money in my bank account has gone to zero because of inflation, and like immediately he's grabbed my attention because I'm just thinking, oh my gosh, that is a different world than I live in because my bank account has stayed roughly the same, like whatever. And so he has bet his entire life on Bitcoin and supplying this new economy of digital currency throughout his nation. He's actually grown to Brazil also and giving credit, but he's seeing like a true opportunity there where this is it. It's almost like Bitcoin gets around the government in a lot of ways, where they're holding a different currency that no one really knows how to define. Like the IRS in the U.S. has changed their idea of like what Bitcoin is 4 times, but he's truly changing the way that people can do business in Argentina by using this new digital thing. So it's a big problem in Argentina, but so internationally.
Or, I mean, look at Kenya and M-Peso. I mean, that's a digital currency transacted on mobile devices. It's got a whole ecosystem around selling these things in local stands. You know, you've got people out there that are now able to micro-lend utilizing that currency. So, you know, I mean, I think I'm stealing like a 60 Minutes episode here, but, you know, one of the great stories is, you know, the farmer that had no power that was able to then lend to buy the $10 solar panel so that he could power his farm, but he couldn't afford that. So how, you know, they don't have incremental loans or time-based lending there. So how would he do that? So what he did is it was all through M-Peso, and that whole model has really lifted. And I mean, I think Kenya is a great story for Africa as a whole. And, you know, and to Adam's point, I mean, I think in China right now, I think there's a wink, wink, nod, nod, a lot of Bitcoin transactions going on throughout China in a way that allows for a certain democratization of a currency.
Yeah, the other thing I'd add, besides just the within its own country success stories, Sebastian's story is pretty amazing, is in general, I'm super bullish on remittance. The remittance industry is rife with just a lot of fat, super expensive. The more poor a country is oftentimes because the infrastructure is so bad, the more it costs to send money back overseas. My family is from Mexico originally, and so seeing opportunities to be able to disrupt the money movement between global nations is actually really, really fascinating. And there's a bunch of those companies right now that I think are all really inspiring.
I love those.
Yeah.
Thank you. Yeah, next question.
Hi, you guys are all awesome. I wanted to ask kind of a meta question. We kind of touched on it briefly, but about globalization of international payments, like actually paying for goods and services with mobile devices or connected devices, maybe an Apple phone. What do you see as some of the barriers to actually making that like a global standard? Like in India, there's like cash and delivery, and in different countries. Like, what are some of the barriers to kind of standardize that?
Oh.
I mean, it's identity, trust. I mean, there are like a lot of things that go into a transaction like that for the or you just buy with Bitcoin and it's chill because of trustless transactions. I mean, it's. Are you thinking like what moves us towards like just one united like infrastructure?
Why not? Yeah.
Okay. I mean, you just break all the middlemen who are between it, and you have one technology that rules them all, which would be Bitcoin. So that's my answer.
Not that he's biased or anything.
Yeah, I'm not biased. I have no financial incentive.
You know, but I think what we're seeing is there are some elements across the globe that are actually rooting. I think Alipay is going to end up sort of being a dominant player in the Asian market, which will ultimately have to do a deal with the standards we have here, either the clearing systems that Visa or MasterCard are doing. You know, once some of those global pieces come together, then it's going to make it a lot easier. But right now you've got these silos, right? Whether it's SWIFT, whether it's ACH, whether it's, you know, even the clearing systems we're using for credit cards. And, you know, the biggest problem is when any industry is getting disrupted, you know, everybody's trying to hold on to their little piece of the pie. And, you know, the challenge is it's already been sort of slimmed down to the point where this is really a lot of people making a very tiny bit of money per transaction, and it's got to get spread around to all the participants in that food chain. So the challenge becomes, if you disrupt one party, does another party kind of grab their little piece of the pie? So it's hard until there's an inflection point where something happens, like Visa does a deal with Alipay, and all of a sudden you can buy something in rural China in the same way you could buy something here. You know, that kind of moment changes. And then the other thing you have is you have hardware manufacturers and telcos that hate each other too. So like last time I checked, there was not an iPhone Moto combo phone, right? We all know that. And we know that T-Mo pretty much hates every other carrier. So they're all not going to get together. So, and Visa doesn't like MasterCard, right? Last time I checked. So, I mean, you know, it's sort of like no one's going to get along, and they all have to have a bit more harmony in order for any of it to really work, unless Bitcoin just takes over the world.
Well, it's an incentive problem. Yeah. Like, it really is structurally an incentive problem where you need to align the incentive of the government, the individual, and the business. And that's a tough thing to do unless you, like, break the system a little bit.
And it's not just one government.
And
it's
no, and it's 196 governments.
Yeah.
So it's like, you know, there are a bunch of countries in Africa that are very involved, don't like things to change unless they're actually getting bribed. And that's,
they have a system.
Yeah, they have. Well, it's the most capitalist system there is. But the like, there, I don't know. It's a really worthwhile problem to solve, I think, and I think you're sort of like delusional if you think that at some point we aren't going to be like one Earth on one system. But time is basically what it's going to take. Time and trust.
Don't get him started on trust. Don't get him started on trust.
I think what it's bringing up, though, is like we all fundamentally want to have a more open financial system. It's let us down. And entrepreneurs and innovators, sort of the thing that makes it magic is you imagine the world not as it is, but as it ought to be. So we're all sort of going, how do we get to that? And so I think Adam's right. It's a noble but extremely hard problem. And the way I think that we might see our first solutions to it is to break the problem down to smaller cases. So Facebook now like owns all of the world, but it was just in Harvard, right? And so to me, if you want to see Bitcoin or some of the open systems succeed, it's where can super small networks, where it's completely self-contained. Like I'm going to Haiti in a couple of weeks, and I'm curious about that because they've got a huge currency problem. So where are there these super small places where it could get to critical mass? I don't know, but that's where I would personally look to.
You brought up the word that I haven't wanted to bring up the whole time, which is the Facebook story. And you know, you want to talk about who changes the dynamic. It's someone who has 1 billion users, and they're rapidly working on that. Google's rapidly working. That's the other side, which just kind of jumps over all the nations of the world and goes there.
What would you say to those companies?
Tally ho! I mean, come on. Yeah.
I was at a dinner with, this is completely off topic, I love this. But I was at a JP Morgan dinner, and it was really, really funny because I was next to Facebook and another company, Plaid and a couple other things. And I just said like, hey, you know, these guys are going to disrupt you, JP Morgan. And then like they got like, Facebook guy got super defensive, like they are going to disrupt them, and they didn't want JP Morgan to know about it.
And you're the one who let it out of the bag.
We don't want to get into banking.
Up till then, the JP guy had no idea.
Interesting. That's great. I'm not going to be invited back to that dinner.
Thank you guys so much.
Thank you.
Thank you for the amazing content. By the way, I learned quite a few things tonight. Who didn't learn anything here tonight?
No, I'm kidding. I did.
Oh, come on, I learned something.
I
None of
learned
you
a lot.
learned anything?
Yeah.
Oh.
These guys.
We all learned quite a few things. We know that millennials are oblivious to the fact that they're financially illiterate. And also, an indicator of that is the fiasco with Wells Fargo a few months ago, the phony accounts. We are working on a conversational search engine technology to help millennials know about the products out there in the marketplace. So we want to coach them through every product, namely retirement and college loans, to help them find the products that is good for them, matching their DNA.
Mm-hmm.
Now my question to you is, especially Anne, Ephraim, and also Adam, is with the approach that we have, what kind of challenge do you see in actor acquisition in two ends of the marketplace, millennials and partners?
So what are your challenges? Like, you're asking us to solve all your business challenges?
Well, I would like to know what you see.
This is going to take a while.
So by the way, I got a bone to pick with Wells Fargo long before that. I had
And
money,
she's like 10 grand an hour, so this is going to be
So
challenging.
I got hacked, and then money was stolen from my account, and like they were
You have
horrible
cash? I thought you were
customers.
Bitcoin, man.
Yeah, I know. I know. This is the one time. This is what turned me. And don't even get me started on Wells Fargo. I wrote a blog post. You can search for it. And it's worth a read. Honestly, my first question is, does it work? And
I have a demo.
And if it works, like, what does it work for? Because those are all vastly different problems that you just were listing off. And then as a millennial, like, yeah, we are financially illiterate.
Are you still a millennial, man?
Sort of. I don't know. I'm like on the brink where it was sort of like my cell phone was that Nokia block, like, and we played Snake. Like that's.
You're not a millennial, dude.
Okay.
So I love if I could reframe kind of what you said. I love the idea of. I think that what you're doing is you're harnessing what we call the unbundling of the bank, right? So as opposed to cross-selling products, millennials, well, you may say, well, and maybe they are financially illiterate, I think it's also true to say that they're just more transactional in nature with their bank. And the American dream is not necessarily owning a house with 2.5 kids and a white picket fence anymore. It's VRBOing, it's ride sharing. There's a big component of it, which is what does that bank offer you that you can't get from a payment structure like Venmo? And I love the idea that you would take advantage of that and say, okay, we will react to that and allow you to take pieces of your transaction on a day-to-day, month-to-month basis. And you don't have to do that within one organization because maybe they're not pricing it right for you, right? But I think that would be immensely tricky because you're going to have to stay up to speed with all the different offerings that are coming out, all the new companies that are coming out, all the disruption that's coming out, and you're going to have to figure out a way to make that happen very quickly because it's an on-demand economy. So that's my 2 cents.
Well, yeah, and all of that totally makes sense. And I would just add, putting on the venture guy hat to a degree, that number one, you're going to have your customer acquisition cost on one side, and number two, to Adam's point earlier, you should just pick one. If you could, you kind of rattled off a number of different categories, right? Just do well in one. That's what we're really looking for. If you could become successful in millennials and retirement, just millennial plus one thing, not millennials plus 5 things. Then you can broaden out. You have to have that baseline. And then what we're looking for on the venture side is, what's your customer acquisition cost? How do you reach? Millennials are incredibly finicky. Yes, they love Venmo, but Venmo didn't know that until they were there, right? So
they also love The Rock.
Stop it. We're not talking about
who knew, right? So my point is that if you kind of figure out the first piece of the puzzle, which what's your cost to bring them in, what do the economics look like around that, then you can land and expand, if you will, within your category. But the real issue is getting that attention and doing it at a cost and at a point that makes it a really great business, as opposed to trying to solve a problem without making sure that the business side. Because if you get the people coming at a low enough cost, you can stack and rack anything into that.
So a follow-up question, if we get the...
I think we need to move on because we're about
All
to
right,
finish up.
thanks so much.
First one's free, you have to pay for the second.
Thank you.
Yeah, because we're running out of time here. I want to get through a couple more questions.
Hey guys, I'm Arvind. We provide small dollar loans to employees at 0% if they agree to get it deducted from their paycheck directly. It's a voluntary wage assignment. My question is, illegal?
It's illegal.
Okay.
Yes.
Sorry. Don't do that.
Give me another idea, guys.
Think about how much we've saved. You just did this.
So not only is it for greater good, I understand from which angle, usury.
As long as it's for the greater good, though.
Yeah. Tell that to Wilson.
We're not charging any interest, by the way. But
Yeah, no, there's you know what, it's not illegal in all countries, but it is a really hard challenge here in the US. There's a really interesting company out of the UK that's doing that as an employee benefit, and they offer it as part of like an employee benefit package. So my company could offer it to employees, and they're offering small dollar loans, and then they would take a percentage of their, they have a very interesting model because it's also closed looped within the company. But
that's right.
Yeah, right. So
It's legal.
But in the U.S., it's really tough because it's the clawback of pay, and there's the federal government and the state jurisdictions. They have huge restrictions on it, and unless you have a felony against you, like for child payments and things like that, it's very hard to get money from your paychecks.
So is there a difference between wage garnishment and voluntary wage assignment?
It's a very thin line. And I would certainly talk to, I'm not a lawyer, but I would certainly talk to a lawyer about that before going too far down the path.
I have, but thank you for your input. That's very
I guess my question is, if you've run out of everything else to work on in this space and you gotta work on that one, you do have to hire her, actually.
But I agree with the idea that it is noble because there are individuals who can use their transactional paycheck. Their cash flow is a really important component of their creditworthiness, right? And if you can't use that, then you may not be served by a traditional bank. And so, I think I like the idea. I just think that there's some hurdles.
Yeah, microlending and retention is kind of the secret sauce, but good point. Yeah. Excellent. All right, thank you.
Yeah.
Okay, thank you.
All right, I think we'll do one more question.
Is it too harsh?
No, it's great.
No, it was awesome.
Stop it.
That was worth money.
Saved him so much time.
Stop it.
Hi, my question to the panel is that today the insurance model is largely facilitated by an agency and a traditional broker-dealer relationship. What do you see fintech disrupting that model, and if so, how?
Wait. Well, no. That was already disrupted. You missed it. What happened was, remember, Esurance and all those folks? They went and disrupted that, but then all the big insurance companies bought them. So, there was a disruption, and then Allstate and all the others kind of bought most of those players because it was just cheaper. And insurance at some point becomes a scaled business, which is your assets under management allow you to underwrite more deals because at the end, there's an actuary thing there.
So what I think is going to happen by the way, he probably knows way more than I do.
I don't know
in this space. But what I will say is that I learned. I've been talking to a lot of insurance companies because about 12 months ago, all the financial institutions were in my office learning about Bitcoin and the blockchain, and in the last 6 months, it's really been insurance companies. And I think what's going to happen is that insurance companies are going to go back to a very ancient insurance model. I think it's going to actually, so the original insurance model was people were at the ship coffee house, we're at the shipyards, and they'd be like, oh man, 70% of my year's earnings are going to be on this ship. I need to, ensure that it gets somewhere. And someone says, well, I'll, if it goes down, I'll pay for 30% of it, but I want 10% of the upside. Somewhere along the way, insurance companies lost that upside. And and so it just became this ritualistic payment system and then you just don't get me wrong, insurance businesses are great, but they're getting disrupted because it doesn't align with the incentive of consumer. And so I think that long term, there will be a change that evolves more back to what it was. And that's my thought on insurance.
Do you see a reduction in the human element in the chain of transactions?
I always think that's a great thing.
Yeah, it's a great thing. At the end of the day, the challenge is people tend to like to hold on to their jobs really tight, right? And if you're an insurance broker and that's sort of what you do, you're gonna hold on. Now, the question is, can they adapt? And now, one could point to the real estate industry and say, there's still a lot of salespeople and brokers out there, so they've seemed to have fought back quite a bit. So I think at the end of the day, if Geico can exist concurrently with a full-serve broker model, maybe it's not a point of it and, or, if, it's and versus or.
Yeah, the other thing I'd add is, because we have quite a few large insurance companies as customers, and insurance is super complex, just like overly. So there's a bunch of areas to actually create efficiencies in that process. There's the insurance exchange part, right? The exchange itself is super complicated and has inefficiencies. So that's an area where you can create some automation. We have customers that do that. The fee process that happens is actually super complex too. That's an area where you can actually remove people and automate part of the process. So you've got to look at the whole supply chain of insurance, and I think F and Adam are right. The model is changing, and so the questions are, which part in the supply chain does a fintech company come and help improve and cut cost or automate the process or whatever, or create a trustless exchange? There's a bunch of areas.
I think the exciting things in insurance are like peer-to-peer insurance, like with people being able to insure each other, and then on demand. So like,
Definitely.
I'm taking a picture of my car for like this 30-minute time
Totally.
frame, and these are things that you couldn't have done before mobile. So like, now that we have mobile, you have proof.
Yep.
It's cool.
And then there's
Airbnb,
big,
yeah,
there's
like
big
getting
data
on
there
demand.
too,
Yeah.
because it's got to, and AI will be a huge part of that, because it's got to calculate all the variables, right? Your car on that corner in that street at that moment, right? If it's
We're not insuring El Camino.
Right.
We're not insuring El Camino, but we'll insure 101.
That's what I'm saying,
Yeah,
right?
that's
Right. You
brilliant.
park on El Camino, forget it, man.
Yeah.
Right.
If you take the Waze route,
Right.
we're good. But if
Right.
you go off of it,
Right. Exactly. I mean, that's
Can I just ask a quick follow-up? What are you seeing in terms of insurance startups tackling the chicken and the egg problem? Because it's a business where you need scale.
Totally.
You can insure, you need tools to risk manage your business, so maybe how they're tackling that.
Yeah, so we're not seeing them going at the heart of the matter anymore. They're really going around the outside, and there's so much fat, to Jeremy's point earlier, on that bone that people can just pick a little quadrant of the space and just dig in. And whether you're using blockchain to do ledger tech and signatures and moving through that whole cycle, there's just so much fat still in that cycle. Whether it's just big data that just streamlines actuary, or AI that makes them incrementally more efficient, that's a good business.
Okay, so I think we're at the end of our evening here, so I hope everybody enjoyed the panel, and I'd like you to please join me in giving a hand to this amazing panel.
that would be fun.